Get ready to explore the exciting world of non-banking financial services, where 4 standout companies have taken the lead in vehicle financing. In today's video, we are going to discuss Cholamandalam Finance, M&M Finance, Shriram Finance, and Sundaram Finance. We will be comparing these companies based on different factors, and by the end of this video, we'll uncover some top contenders that could be perfect for your long-term investment plans. Cholamandalam Finance is a part of the Murugappa Group and holds the majority equity stake of 51.6% in the company through Cholamandalam Finance Holdings and other group entities. During FY 2022, the company introduced 3 new business initiatives targeting the SME sector. CSEL offers personal loans, professional loans, and business loans to salaried individuals, self-employed professionals, and micro and small businesses. It has a presence in 380 locations. SBPL provides secured business loans and personal loans backed by self-occupied residential or commercial-cum-residential properties as collateral. It operates in 325 locations. The SME product suite includes supply chain financing, term loans for capital expenditures, loan against shares, and funding based on machinery hypothecation for specific industries. This division serves customers from 66 locations, experiencing business growth through both traditional and fintech partnerships. Chola's business is divided into 4 segments: vehicle finance, loan against property, home loans, and the new business ventures. Vehicle finance has been the primary focus over the last decade, achieving an AUM growth rate of 16% CAGR. Loan against property has witnessed an annual AUM growth rate of 13%. Home loans have shown robust growth rate at a CAGR of 60% over the past decade. In FY 2022, Chola ventured into new business, which has demonstrated impressive growth at a CAGR of 174%. While the vehicle business contributed over 70% of AUM until 2020, the aggressive expansion of the new business since 2021 has led to its contribution decreasing to 63%. The contribution of loan against property declined from 29% in 2015 to 20% in 2023, while home loans have steadily increased since 2015. The new business segment's contribution in 2023 was 9% and is projected to continue growing. Within vehicle finance, there are 10 segments, with the top 3 segments accounting for 57% of AUM and the highest contributor being used vehicles at 27%. Shriram Finance Limited was formed by merging Shriram Transport Finance Company, a major financier of commercial vehicles, and Shriram City Union Finance, a leading financier of two-wheeler and a pioneer in MSME sector financing. It belongs to the Shriram Group, which is involved in various financial domains such as general insurance, life insurance, asset management, and vehicle finance. Shriram's primary focus is on vehicle financing, with commercial vehicle financing comprising 50% of the AUM, followed by private vehicle financing at 18% and MSME loans at 10%. M&M Finance, a part of the MAHINDRA Group, primarily concentrates on vehicle financing. Within this category, auto and utility vehicle financing contributes 33%, car financing 18%, used vehicles 17%, tractors 12%, and CV and construction vehicles 12%. Nearly 44% of vehicle loans are related to M&M vehicles. M&M Finance has 3 subsidiaries. Mahindra Rural Housing Finance Limited offers loans for house construction, extension, purchase, and improvement in rural and semi-urban India. M&M Finance holds a 98.5% stake in this subsidiary. As of Q1 FY24, the subsidiary has 6,000 plus crore loan and advances, with total income at 342 crore and PAT at minus 23 crore. The gross NPA stands at 11.97%, while net NPA at 8.5%. Mahindra Insurance Brokers Limited is licensed by IRDAI for insurance broking in life, non-life, and reinsurance sectors. M&M Finance holds an 80% stake in this subsidiary. As of Q1 FY24, the company has net premium of 852 crore, total income of 164 crore and PAT at 17 crore. A Mahindra Ideal Finance Limited provides gold loans and lease and loans against vehicles in the Sri Lankan market. M&M Finance holds a 58.2% stake in this company. As of Q1 FY24, the subsidiary posted a total income of 14 crore with a PAT of 62 lakhs. However, the gross and net NPAs remained elevated at 31% and 29% respectively. The Sundaram Finance Group encompasses several entities. Sundaram Finance focuses on asset finance, commercial lending, working capital finance, and distribution. Royal Sundaram, a joint venture with Aegis Insurance International, specializing in general insurance. The asset under management distribution includes 29.3% for medium and heavy vehicle financing, 25% for cars, 17.5% for retail CV, and 10.7% for construction equipments. Sundaram Home Finance is a wholly owned subsidiary of Sundaram Finance with an AUM of 11,000 crore and a PAT of 215 crore as of FY23. It maintains healthy gross and net NPAs at 2.3% and 1.1% respectively, with 117 branches catering to over 40,000 customers. Sundaram AMC, another wholly owned subsidiary, has an AUM of 54,800 crores and posted a PAT of 73 crore as of FY23 with around 85 branches. Over the past decade, these companies have experienced substantial growth in their asset under management. Leading the pack is Cholamandalam Finance, whose AUM has surged from 25,000 crores to 1 lakh crore with a commendable CAGR of 16%. Following closely is Shriram Finance, which witnessed growth at a CAGR of 14%. However, it's important to note that Shriram's AUM growth in the last 2 years includes the amalgamated company's AUM. M&M Finance also demonstrated robust AUM growth, increasing from 36,000 crore to 1 lakh crore at a CAGR of 12%. In comparison, Sundaram has a slower AUM growth at 8%, culminating an AUM of 34,000 crore as of FY23. The annual disbursements for these companies showed steady growth between 2014 and 2019, with a notable slowdown during the COVID-19 period. However, disbursements regained momentum between 2021 and 2023. Chola experienced an impressive 87% growth in the disbursements between 2022 and 2023. M&M Finance and Sundaram followed suit with growth rates of 76% and 57% respectively. All these companies have maintained a positive profit after tax over the past decade. Chola has consistently achieved year-on-year profit growth, increasing from 364 crores to 2600 crore at a CAGR of 22%. Shriram also witnessed a profit growth at a CAGR of 22%, although its profits remained stable between 2018 and 2022. In 2023, Shriram recorded profits exceeding 600 crores, attributed to the amalgamation of entities. Mahindra & Mahindra Finance experienced various phases of profit fluctuations over the decade, with a modest CAGR of 10%. Sundaram also exhibited a similar trend, with profit growing at a CAGR of 10% over the past decade. As of Q1 FY24, the total borrowings stand at 1.5 lakh crore for Shriram, 1.08 lakh crore for Chola, 75,000 crore for M&M Finance, and 32,000 crore for Sundaram. Chola heavily relies on bank borrowings, constituting 54% of total borrowings. Chola also utilizes non-convertible debentures at 16%, followed by securitization at 10%, and commercial papers and bonds at 7%. M&M Finance raises capital through bank borrowings at 40% and NCDs at 32%. Securitizations, term deposits, and bonds contribute to 24% of total borrowings. Shriram, on the other hand, relies on term deposits at 23%, bank borrowings at 26%, NCDs at 19%, and securitization at 14%. It also engages in offshore borrowings, constituting 8.5% of total borrowings. Shriram relies on NCDs at 41%, bank borrowings at 26%, term deposits at 15%, and securitization at 11%. The cost-to-income ratio for these companies experienced a decline from 2017 to 2021 due to decreasing interest rates, but has been increasing since 2021 due to the increasing interest rates. As of FY23, the ratio remains elevated at 42% for M&M Finance and close to 35% for both Chola and Sundaram. Shriram consistently maintains a cost-to-income ratio below 25% due to a balanced borrowing mix. These NBFCs have maintained a healthy capital adequacy ratio for the past decade, well above the RBI norms of 15%. As of FY23, the ratios for Shriram, M&M Finance and Sundaram remains at 22%, while Chola stands at 17%. The gross non-performing assets for Sundaram have consistently remained below 2.5% over the past decade. M&M Finance gross NPAs declined from 9% in 2021 to 4.5% in 2023. Shriram's gross NPAs has seen a continuous decline from a peak of 9.4% in 2018 to 6.1% in 2023. Chola, as of 2023, has gross NPAs of 4.6%. The net NPAs at the end of FY23 for Sundaram is 0.9%, M&M Finance is 2%, and Chola and Shriram is 3.1%. Regarding net interest margins, M&M Finance experienced a decline from 9.9% in 2014 to 7.6% in 2023. Chola has consistently maintained its NIM in the range of 7% to 8% over the past decade. Shriram witnessed a NIM jump after the amalgamation, posting a NIM of 8.4% in FY23. Sundaram also saw an increase in 2023, reaching 9.1%. Chola has maintained a return on equity above 15% for the past decade. M&M Finance, however, exhibited wide fluctuations in return on equity, which decreased from 18% in 2014 to 11% in 2023. Shriram's ROE also experienced declines between 2018 and 2022. The profit after tax margins for these companies has shown significant growth from the lows of 2020. As of FY23, Sundaram posted an impressive margin of 23%, followed by Chola and Shriram at 20% and M&M Finance at 16%. Shriram has established an extensive network of branches, increasing from 741 in 2015 to 2900 in FY23. M&M Finance also boasts a robust presence with 1,380 branches across India. Chola has expanded its branch count from 575 in 2014 to 1,190 in 2023. However, Sundaram has experienced more muted growth in the past decade and currently maintains 670 branches. Chola's promoters have consistently held a stake of 51.5%. On the other hand, FIIs have increased their stake from 11.3% to 20.9% over the past 3 years. Meanwhile, DIIs have reduced their stake from 29% to 20.5% during the same period. Public shareholding remains relatively low at 7.5%. Shriram's promoters' holdings have remained at 25%, while FII holdings have seen a notable uptick of 9% in the past 6 months, reaching 55%. DIIs have increased their stake from 4% to 15% over the past 3 years. However, public holding remains at its lowest level of just 4%. M&M Finance promoter holding remains high at 52%, but FII holdings have decreased from 21% to 14% in the past 3 years. During the same period, DII holding increased from 12% to 27%. Public holding decreased from 14% to just 7%. Sundaram's promoters hold a 38.5% stake in the company. FIIs have reduced their stake from 11.4% to 7.8% over the past 3 years, while DIIs increased their stake from 11% to 17%. Public holdings decreased from 41% to 36%. In terms of valuation ratios, Shriram Finance emerges as a clear winner in terms of being undervalued. It has lowest EV to sales ratio of 6.4, a price to books ratio of 1.1, an EV to EBITDA ratio of 9, a market cap to sales ratio of 1.5, a PE ratio of 12, and a PEG of 0.2, making it comparatively more attractive than its peers. Shriram Finance Management has seen a promising outlook for FY24, aiming for a 15% growth in asset under management. They project the cost to income ratio to remain within the range of 27 to 28%, while aiming for a return on equity between 15 and 16%. Despite the potential compression of net interest income due to increasing interest rates, the management is confident in maintaining it at the current level of 7%. Leveraging its merged status, Shriram Finance strategically positions itself to capitalize on diversified AUM mix, improved liability access, and enhanced cross-selling products. With its future growth expectations and undervalued stock, Shriram Finance appears to be a promising candidate for a long-term portfolio investment. Cholamandalam is observing strong demand across various vehicle financing segments and anticipate achieving a YoY disbursement growth of 20% in FY24. The company continues to experience robust traction in home loans and new business endeavors. However, there is a cautious approach towards expanding the unsecured loan book. Overall, Chola is expected to deliver a healthy AUM growth of 25% CAGR over the FY24-25 period. The recent capital raise initiative is poised to reinforce Chola's capital position and facilitate sustained growth. Given its positive outlook, Chola stands as a second preferred choice for long-term investment. If you appreciate this content, I encourage you to explore my video discussing footwear companies and the long-term prospects of Federal Bank. If you find my work valuable, please consider liking, sharing, and subscribing to my channel. Thank you.